This video is brought to you by Brazil Resources Incorporated, trading on the TSXV as BRI and on the OTC as BRIZF. Brazil Resources is exploring for gold in the emerging gold districts of Brazil. The company is 35% institutionally owned, with 16% of outstanding shares held by the KCR Fund, controlled by Doug Casey, Rick Rule, and Marin Katusa. The geological team has earlier discovered more than 10 million ounces of gold directly in Brazil and is led by successful mining CEO Amir Adnani. The company has $10 million in cash and no debt. For the thrill of gold discovery, visit BrazilResources.com or call 855-630-1001. Thank you for joining us at FutureMoneyTrends.com. I'm here with economist John Williams of ShadowStats.com. It's important to note that when you're making your investment decisions that you know what's really going on about the economy. And we highly recommend people visit ShadowStats.com and become a member. John is an expert in statistics, and we always appreciate talking to him. John, thanks so much for being with us today.
Thanks for having me, Dan.
John, when you look at the numbers as far as what the Fed is doing and what the federal government will need to continue, with stimulus and entitlements, do you see the Fed, is it an option for them? I mean, they're running around saying they're not going to do more quantitative easing. Is that a realistic option, or is more quantitative easing coming?
I don't see how they can avoid more quantitative easing if they continue as they have in the past and attempt to prop up the banking system. I'll contend that the Fed's primary function is to keep the banking system as healthy as possible, to keep it afloat. It's a private corporation owned by the banking system. It's not a federal government agency, although it operates under some regulations set out by the federal government. Ostensibly, they have a mandate to maintain sustainable economic growth and to contain inflation. But the Fed's primary function is to keep the banking system afloat. And that will take preference over any other consideration, including the economy. There's really not much the Fed can do to stimulate the economy. And it's not easy for the Fed to contain inflation. And they're not doing a very good job of keeping the banking system afloat, but I'll contend that the easings that we've seen, quantitative easing, quantitative 2, and what likely will be some form of quantitative easing 3, is that you'll see you'll see a circumstance where the Fed's actions will be aimed primarily at providing liquidity to the banking system, but where that may not be too popular politically, they will continue doing what they have done in the past, and that is blame the easing on the need to stimulate the economy. That's a foil. So they're doing it under the cover of a weak economy. What they're doing will not stimulate the economy, and it's not going to help the banking system much. What it's doing is just kicking the can down the road, the proverbial can. They did it big time back in 2008. They're going to have to do it again. The problem is that we're getting close to the can, and they can kick it down the road maybe a little bit, but we're near a cliff, and there's not much they can do to avoid it. There's really no viable options for the Fed. That's a big problem.
How do you see this unfolding as far as the catalyst? Will it just, will it be a China, saying no more dollars? I mean, what will cause the world reserve currency status to become valueless?
Well, I would expect that that'll result from a number of major trading partners starting to recognize that the situation with the dollar is hopeless. It could the loss of reserve currency status could come out of OPEC, where the dollar is at the moment used to denominate oil. The problem is that when the Fed takes its next action, and I believe that will not be too far down the road, that in of itself will trigger very heavy selling of the dollar. We saw really a global dollar panic following the negotiations a year ago in July or such about the debt ceiling extension and addressing the long-term solvency issues. Absolute fiasco. The rest of the world, when they saw what was happening there, dumped the dollar. Dollar plunged against the Swiss franc, against gold. And then there were all sorts of interventions to prop the dollar and to redirect the markets to hammer the euro. That moved the attention from the U.S., but the big problem remains the U.S. We're the elephant in the bathtub of the global sovereign solvency issues.
When it comes to protection for people, and going into this kind of environment, there's high unemployment. What advice do you have for people who might be looking for work or looking for a job? What jobs could actually thrive during this environment, if any?
All I can suggest is that you be creative. I find the average individual usually is, as is the private sector of the economy. Small businesses, large businesses. Small businesses have a lot more flexibility than the large businesses to change. You just have to look at the opportunities in your area.
As far as investments, John, do you look at all the commodities or just gold and silver? Do you like oil, for example?
Well, it's a very difficult circumstance right now. I think we're in a time where you're going to have a major upheaval in the markets and the value of the dollar. With that, the problems in the value of the dollar leading to much higher inflation, and I'm still looking at a hyperinflation in the next couple of years here. It's a circumstance where the U.S. investors should be looking to preserve as well their assets in terms of long-term purchasing power. Your primary hedge there is physical gold, silver, and getting some assets outside the dollar. I still like the Swiss franc, the Australian dollar, and the Canadian dollar.
Do you consider real estate a hard asset, or do you think there's an opportunity in getting these?
Asset, and so are gold stocks and such. The problem is that you may have some short-term liquidity issues. You may be seeing some now in the real estate market. If the system gets into real difficulty, I can't assure you that you're going to be able to work the normal transactions you would with your broker or bank. I can't tell you how that's going to go. So for the longer haul, I mean, to get you through the crisis, I would look at the hedges that are high quality and liquid, such as gold. Longer term, real estate should generally do very well against an inflationary environment, as with the gold stocks. But that's for the period down the road. I mean, you can hold it through the crisis.
Yeah.
But you look to get your core assets covered in the
John, how severe do you expect this crisis to get? Do you think there could be? I know we've talked last interview about possible civil unrest. Do you think the states, some of the states, are adopting gold and silver as legal tender? I mean, do you think any states would maybe even try to secede from the union?
I can't tell you that they would. I don't know. I'll tell you one thing, though. I mean, my general outlook has not changed since we last talked. If we have a hyperinflation, and I'm expecting that we're going to go in that direction, You could look at a country such as Zimbabwe, which is very different in terms of its background and structure. But they had the world's probably worst hyperinflation ever seen. Yet that took place over a couple of years. Economy continued to function. People still had jobs. The reason that was able to happen was that they had a functioning black market in the U.S. dollar that provided a backup to their currency. And you'd get paid your wages in the local currency, you'd run to the black market, you'd convert it to dollars, and you had your store of wealth, and that enabled you to pay your rent, buy your groceries, whatever. Ron Paul had put forth legislation, federal legislation, similar to what some of the states have put through, although the state laws do vary, and unless you have this on a national scope, it's not going to help too much. But on a national scope, it would allow a free conversion of Federal Reserve currency for gold at whatever the market exchange rate is, and without tax consequence, so that people could get paid in their Federal Reserve dollars and convert to gold, and they'd have a backup. And that, in many ways, would limit the economic damage from a hyperinflation. There'd be all sorts of problems, but you could still have a functioning economy. Without a backup system, you're more likely to fall into the civil unrest. I don't think anything's happening with the Ron Paul legislation, but the concept is a good one, and one that would help in a hyperinflation.
John, in closing, obviously a dollar crisis is a global crisis, but my question is, does a dollar crisis become a fiat currency crisis? Are all the fiat currencies in danger once this reserve currency goes out?
Well, that's always a possibility. The thing is that the U.S. dollar is the worst of the major currencies, and I mean, I would leave it at that. That among the major currencies it'll be a dollar crisis. The thing is that it is such a major component of the global currency system now, and 80% of all currency transactions involve the U.S. dollar on one side. You're going to have a new global currency system that comes out of this. I can't tell you what it's going to be. I'd be willing to speculate that they'll probably have some backing in gold in order to help sell it to the public, to create some public credibility for it. But nothing works until our system gets brought into balance, whether it's by deliberate action or the result of an unmanageable crisis.
John Williams of ShadowStats.com, we thank you so much for your time, sir, and appreciate for all the work you do and keeping the truth going where the government has failed us. Thanks so much for your time.
You're most welcome, Dan.
You have a great day.
Same to you. Bye.